Hey guys, I'm Teri Ijeoma, founder of Trade and Travel.
And I'm Lynnette Khalfani-Cox, the money coach.
And today's topic is ETFs, exchange traded funds. We're so excited to talk to you about this because so many people have been actually starting to invest in ETFs lately.
That's right. In fact, there's trillions of dollars going into the ETF market. And mainly it's because a lot more people want to have a lot more control over their investments throughout the course of a trading day. So I don't know if you guys have gotten a chance to see our other video on mutual funds, but we really wanted to highlight some of the benefits and some of the features of exchange traded funds. So first of all, you need to understand that an ETF trades pretty much exactly like a stock, and you're like, oh, you're getting excited. You hear stocks. You hear the word stocks.
We can trade it in and out of it like a stock, yes.
Exactly. So with a mutual fund, you can't trade in and out of a mutual fund during the course of the day. But with an ETF, you actually can.
Yes.
So the price is going to vary. It's going to fluctuate on, any given minute, any given hour. And they're going to be traded on the same type of exchanges where you find individual stocks.
Yeah.
So you can buy ETFs on the NASDAQ. You can buy ETFs on the big board, on the New York Stock Exchange, for example. And this is a way that a lot of investors have been able to buy large numbers of securities, because an exchange traded fund at the end of the day has a whole bunch of securities packaged into one investment. So that ETF, you're not just buying a single stock. You're likely buying dozens, maybe 100 or even 200 stocks when you purchase an ETF.
At one time.
Yep.
Like that's one of the things I love about ETFs or exchange traded funds is that it's a group of companies that are all traded together as a group. So a lot of people like to invest in certain sectors. So say, for example, I'm interested in the healthcare sector, but I don't really know which company I want to invest in. So they may go into an ETF that follows that whole sector. And there's actually I'm going to tell you these sectors because many people don't realize that there's sectors the overall market acknowledges.
Correct.
So there's consumer discretionary, consumer staples, energy, financials, health, industrials, materials, real estate, technology, communications, and utilities. Those are some of the top sectors that investors follow, and you can also invest in ETFs or exchange traded funds for each of those sectors. So say, for example, there happened to be a rumbling overseas and you thought maybe that gas or oil would increase.
Hint, hint.
Hint, right?
Russia, Ukraine, hint, hint.
Just saying, maybe you might want to look into with this disclaimer, this is for educational purposes only. We are not telling you what to do.
Yes.
But just the idea that maybe you had this idea, you know what, I really would like to invest in some energy companies because I think something might happen with oil. This would be the time to say, you know what, instead of picking one company, I'll look at this whole fund that actually touches all of the major energy companies.
Right. And by the way, in case you're interested, something has happened with oil. Oil has been up, above $100 a barrel. And, we know that we're going to see a lot of volatility in that sector in particular. We're certainly not making light of the invasion by Russia of Ukraine because, Russia is the number 2 oil producer in the world. And they also distribute a lot of natural gas. So we're definitely going to see some impact on the energy markets in that regard. Already, President Biden and leaders all around the world have been releasing strategic reserves of oil, to help cope with prices and to try to kind of tamp down. By the time you guys see this, you might be feeling a little bit more of that, even not just as an investor, but at the pump.
As a person,
yeah.
I saw somebody put up a video on TikTok. They were like, there's this funny reel sound that's like, oh Lord.
Oh Lord.
And he went and looked at the price of gas.
Yes.
And he's like, oh Lord.
Oh Lord, yes.
Oh Lord.
Yes. Well, recently, AAA of course tracks this stuff, and they said that the average price price of gas was about $3.50, $3.54 a gallon. But now experts are saying that because of the Russia-Ukraine conflict, we're going to be looking at gas prices of about $4 a gallon. Again, some places in California, et cetera, it's already like way above $4. It's almost hitting $5. So we need to understand that all of these things impact your wallet in a variety of ways. Yes, as an investor, but also just as a layperson in terms of the impact that it might have on you. So all of these sectors, they have real life implications for you guys.
They do. So you may think about this. If your wallet is impacted because gas is going up, well, then maybe consumer discretionary, maybe those companies are going to start to fall because people won't have as much spending power.
Exactly.
So maybe for those, if you're invested in those companies, you say, you know what, let me take some money out of this sector and move it towards another one. And when we think about ETFs, the coolest thing, though, is that you don't have to pick one company. You can actually go by sector. And that's a relief for a lot of people who are not as good with picking individual stocks. But the cool thing is ETFs still trade like a stock. So as like right now, another popular way to invest in ETFs is also the indexes. So following the overall S&P or the overall Dow or the overall NASDAQ, which is technology companies. So say, for example, you get into an ETF and it's at $35 right now, and then it starts rising. You can actually sell that ETF, which is that bucket of companies, and make a profit when it gets to $40 or however much. And that's the cooler thing.
Right, that's right. And you guys, again, investments all carry risk. They have the option or the opportunity for you to gain money or to lose money. One of the ETFs that I invest in is, as I mentioned, QQQ, which is an Invesco product that tracks the NASDAQ 100.
I love their commercials, by the way. Have you seen them? They're like, there's like a spaceship, and then some like random person comes in, and they're like eating popcorn, and the guy's like, why are you here? And they're like, well, I invest in you because I invest in QQQ. So.
Exactly. So, well, my QQQ was doing so well. I got to tell you, man, this year it hasn't been doing so well.
Last
so
3 months.
the first quarter of 2022 has been rough on a lot of technology investments. I'm a long-term investor, and I'm good, and I'm going to stick with it, and all that good stuff. But I'm just sharing with you guys, honestly, there's upside potential and there's downside risk. And so you also have to know your time horizon, right? When you're thinking about making an investment of any kind, whether that's an ETF, individual stocks, mutual funds that are actively managed or passively managed, or doing day trading or swing trading, you absolutely need to understand your time horizon. How long do I intend to be in this investment, and when do I plan to get out, and under what circumstances will I be like, I'm out? Okay,
And we just looked up some research too that said over time, index funds actually outperform mutual funds.
Correct.
So even though your QQQ, or more so even the Dow Jones that follows the top 30 companies, or the S&P 500 that follows 500 companies, over time, even though it's not doing so well right now, it'll start increasing.
And I have a high degree of confidence, just me being a person who likes to invest in things that are technology related in terms of the trends. I'm perfectly happy. I have a longer term horizon. I can ride out, downturns and that kind of thing. But I'm just, being honest with our audience and sharing with them that, everything is not going to always be a winner every single month, every single time. And so part of the volatility that you might see on any given day when you're investing in individual stocks or investing in ETFs, which trade like stocks and trade on an exchange, you might see that price action going up and down. You might see a lot of, vagaries and a lot of volatility in the market. And you don't have to just get spooked by that.
Yeah. And it sounds like we're moving a little bit into the our 2 cent section. So one of the things I love, even sticking with the QQQ, is recently if you all follow earnings, we're going to do a whole nother video on it, but once a quarter, the companies report how they're doing. In this past quarter, whenever you see this video, just know that this is what happened when we were filming this. But Meta had earnings and they dropped a ton. Facebook, formerly known as Facebook, Meta had earnings and dropped like $100. Then you had Google had earnings and it went up $100. Then you had what was it, Netflix. Netflix had earnings, it dropped $100. Then you had Amazon. Amazon's earnings, it went up $400. So if you had picked an individual stock, which I did, I did well. I did okay. But if you had picked an individual stock, it's the luck of the draw.
Which one was,
if it would have went down or up. You would have been like, oh, but I love Meta. I'm always on Facebook all the time. And your portfolio would have went down.
But that ETF.
Right. But Lynnette's ETF and QQQ, which also has all 4 of those companies, it was a bit more steady.
Yep.
Because on those down days, it didn't drop as much because it has some Facebook, but not all Facebook.
And again, guys, the ETF is giving you that power of diversification. If one of the securities in that investment does poorly, chances are a couple of other ones can do well to offset some of the downside. So again, that's one of the benefits. My 2 cents on it all is that I love ETFs as a product. I think that it is a smart way for folks to invest. I love the tax efficiency factor. I love the flexibility, the ability to get in and out of the market and to trade on a regular basis. And that's where we're seeing a whole bunch more activity in this sector as a whole. You know, the mutual fund universe as a whole is something like $63 trillion. And ETFs are quickly gaining steam and building up in terms of assets under management. I think we're going to continue to see more of them. And I think they're worth a look for anybody who's interested. Another
thing we didn't touch on is it's a lot cheaper to invest in ETFs too. When you think about, I'm still thinking about the index ones, like the Dow is it 35,000?
Somewhere around there,
It's high. But then the ETF that covers the Dow is at $350. So as an investor managing a smaller account size, you can still have exposure to all 30 companies of the Dow, but you just, only spend $350 per share.
Right.
So that's another big benefit too.
Right now, as of this taping, about 34,000. So right there. But fees, all of that stuff matters. Again, we always want to caution you that you should be cognizant of fees. You should understand the expense ratios you're paying. You should understand commissions you're paying. You should understand any kind of marketing or 1B fees that are paid, and those are associated with mutual funds. Long story short, when you see all of those commercials, you said you like that Invesco commercial, for example. We're paying for that at the end of the day. They're so-called marketing 1B fees get passed along to investors in mutual funds, because we have to help the companies to pay for their marketing
mutual
outreach.
Funds or ETFs?
All of them, all of them. They all got fees. Every single one of them has some fees, okay? But on the mutual fund front specifically, there's something called marketing 1B fees. And basically it's that these companies are doing marketing, commercials, print advertisement, digital ad outreach, and they pass along those costs to us, to shareholders. Yeah, of course. They got to pay for all of that advertising somehow, and it comes out of our pocket little by little by little.
And that's something.
So
that
be
you
aware
also
of that.
Check the fees of any kind of fund you get into, whether it's ETF, mutual fund, index fund. Check the fees, because that's important. And check to see if they have any fees for getting out early. Usually with ETFs, we looked into this in another. Check out the video for mutual funds. Usually with ETFs, though, they say that the taxes are less because, first, you don't get them distributed automatically. It's not like you don't have to take a profit until you actually sell the ETF. So that's nice that the taxes are a little better, though.
That's right. So I hope you guys have gotten a lot out of this video and that you understand a lot more clearly now what an ETF is and how it works, and how you can help make sure that it's a nice little part of your portfolio, hopefully something that'll help you to make money too.
Yeah.
That's what we're about, helping you to make it make sense and make some money in the process as well.
Definitely. And if you're looking to get started in ETFs, definitely check out there's a website, ETF.com, and we're not getting any kind of promotion for them, but you can go on there and see different ETFs that cover a group of companies that you're interested in, whether that's an index or a sector. So that might be a good place to start.
Yep. Do your homework, guys. Do your research. All right. And we'll see you on the next one.